You enter a trade because you saw a pin bar, or because the RSI was oversold, or because someone on Twitter said, we are going lower. That is not trading, that is guessing with extra steps. High probability traders do not guess. They map. They draw the battlefield before the first shot is fired. Welcome back to Trading Forex Stores. Today we are building a trade map that turns random entries into calculated ambushes. High probability trade mapping starts with 3 levels, and only 3. The first level is the weekly, high, and low. Draw a horizontal line at the highest price of the current week and another at the lowest. These are your borders. Price between these lines. No trade? You wait. The second level is the previous day's high and low. Draw those as well. These are your zones of interest. A high probability trade only happens when price breaks yesterday's high or low and then comes back to retest it as support or resistance. That retest is your trigger. The third level is your entry zone. Not a single price. A zone. A 15 to 20 pip area where you'll enter. Why a zone? Because market makers do not care about your exact entry. They care about liquidity. A zone gives you room to breathe. It stops you from chasing a breakout that ran 30 pips without you. Now let us map a real trade. It is Tuesday morning. Price is currently trading between the weekly high and low. You are waiting. At 10 a.m., price breaks above yesterday's high by 20 pips. You do not enter. You wait for the pullback. At 2 p.m., price returns to yesterday's high level. It touches it and bounces up. That is your retest. Your map says enter with a stop loss 15 pips below yesterday's high. Your take profit is the weekly high. That is a clean 2 to 1 or 3 to 1 depending on the pair. You did not guess. You did not feel. You followed the map. The map does not care about your emotions. The map does not care about the news. The map only cares about price reacting to structural levels. Here's the rule that separates amateurs from experts. If the retest does not happen, you do not trade. Period. Most traders see a breakout and chase it. They buy at the top of a 4-hour candle. Then price reverses and stops them out. The map would have kept them out. The map said, wait for retest. They did not wait. They lost. Mapping is not about being right. It is about being patient. A high probability setup might appear 3 times a week on a single pair. That is fine. You do not need 20 trades. You need 3 good ones. So, draw your 3 levels every morning before London opens. Weekly, high and low. Yesterday's high and low? Your entry zone. Then wait, price will come to you or it will not. Either way, you do not chase. Comment map if you are done chasing breakouts. This is trading Forex Stores. Draw the map. Wait for the retests. Take the money.